Investing is hard work, but that hard work can pay off with huge returns. This video might make it easier for you in the future. I'll outline my ETF rating system for you all, and I'll try to include this rating system in my future ETF investing videos. So why use a rating system at all? Because in the act of rating these ETFs, it forces you to ask questions, specific questions, and these questions teach you about the investment. I ultimately make better investment decisions by using this system. I'm Skylar James. Welcome back to the channel. Let's get into the nuts and bolts of it. First, let's talk about why you need this rating system, how to use it effectively to make money, and how you can thank me for it. Okay, you don't really have to thank me for it, but if you enjoy my investing insights, the best way to let me know is by hitting that like button or becoming a subscriber. Odds are, if you're here, you've seen me break down ETFs before, maybe many times. I ask questions during the breakdown. What's the AUM? What's the makeup of competing ETFs? Who issues the ETF? What's the thesis behind the fund? Those are great and important questions that you as investors should be asking. But can I ask those same questions in a simpler, more condensed system? Maybe one that's just a little more fun than just comparing boring AUM? Here's what I'm thinking, and I want your feedback on this. I've settled on 5 categories for my rating system. Now, what I want you to do as we go through these is to think of ETFs in your life, your portfolio, ask these questions about them. Do you find that these questions are helpful as we go through them? Let me know in the comments down below. The first question in the ETF rating system is the investing thesis of this ETF on the runway or in the hangar? Meaning, like, how close are we to take off? Think about semiconductors. Semiconductors are on the runway. They are lifting off as we speak, and I expect them to be airborne and continue going higher for the next 20 years. On the other hand, it could be said that cannabis ETFs are stuck in the hangar. They have not been given permission to take off. The plane, the ETF, is fueling, waiting for the all clear from Joe Biden up in the control tower. He determines when the cannabis stocks will take off. So things on the runway are about to take off or are taking off. Things in the hangar will stay suppressed for a while. This could influence how soon we should start to take a position. The second question, is this investment fading in importance or is it futuristic? Semiconductors, software, EVs, those would be futuristic. And fossil fuel giants or banks that your grandparents had accounts with, those are fading. The first 2 metrics, you have runway or hangar, future or fading, can also be viewed through the lens of time. How long will an ETF be in the hangar? How long before that ETF turns from futuristic to fading? The third question in the rating system, where does the ETF stand on ESG? This is the most complicated and subjective question of the whole screener. ESG means different things to different people. The investing community as a whole struggles to agree on a definition. Some people think ESG funds tend to outperform their broader benchmark, others don't. But don't fret, investors have access to an ESG dummy check for free. Take a visit to MSCI's website and view their fund screener. They've measured hundreds of ETFs and stocks against their ESG criteria and offer the full report with just a few clicks. High-level research for free. Kind of like my YouTube channel here. Speaking of, it's worth becoming a subscriber if you like this kind of content. Subscribers find out about my newest videos first. So investors could check MSCI for an ESG analytics and find ETFs that fit their comfort level. And even investors who don't believe in ESG ratings should visit MSCI screener just to learn more about the ETF. The more you investigate, the better decision you end up making. I have a dedicated video on my channel on how to use MSCI's ESG rating tool. Check it out if you want more info. Okay, so the first 1, 2, 3, you've got hangar or runway, futuristic or fading, an ESG pass or ESG fail. The fourth, easy or expert. Is this ETF easy or is it for experts? An ETF would earn the expert label if it was, say, a leveraged ETF, something very volatile that requires keeping a close eye on it. Expert is also something that might require an extra layer of understanding in the stock market or in commodities. Expert, in short, is something where your money could vanish quickly, and it probably wouldn't be suitable for someone's for, say, $10,000. The opposite of expert would be the easy. It would be easy if it was VOO, the S&P 500 ETF, or QQQ, or semiconductors. You buy it, you hold it, you forget about it. Easy versus expert is more about the volatility and the time management of the ETF than it is about the return potential. The fifth and final question for the rating system: is this ETF an inflation hustle or an inflation headache? An inflation headache ETF might be full of low margin businesses, ones that are unable to pass along rising costs to their consumer. And an inflation hustle is a business set to expand during these, let's call them transitory inflation worries. That's it. That's the 5. I didn't ask you about growth or value. I didn't ask about domestic or international. We already have access to those metrics all over the internet. This is really just my flair, my spin on breaking down ETF investing. Is the ETF in the hangar or on the runway? Is it fading in relevance or future proof? Does it pass the EFG test if you have one? Is it expert level investment or is it an easy one? And is it an inflation hustle or an inflation headache? Let's walk through an example. Let's use semiconductors. We could look at either SOXQ or XSD, both of which I like for my goal of retiring early. Check out that video if you haven't already. First, hangar or runway? Both are on the runway. Lifting off, check. That's a good sign. I should put dollars to work today on semis because they are on the runway. Fading or futuristic? Very futuristic. Semiconductors are in everything. In a few years, I don't know you'd be able to buy a roll of toilet paper without a semiconductor being in it. Huge, huge, huge market expansion. And the time factor on both of these first two is immediate, the here and now, and for the next 10 or 20 years. So it's all great so far. ESG? XSD gets a triple B rating from MSCI. SOXQ gets a AA rating. You'll see here I'm using SOXX instead of SOXQ simply because SOXQ is too new. And these two ETFs are truly identical minus the expense ratio. These ESG scores are not anything that changes my course of action, which is a good thing. We'll give them both a thumbs up. So are they expert level or easy? Both are easy in my opinion. Both are set it and forget it. Go hike the PCT for 6 months. Don't check your brokerage at all, and these two ETFs will do just fine. And finally, inflation hustle or headache? You have electronics manufacturers. They can pass on rising costs to consumers. We see it in phones, computers, cars. So yeah, semis are an inflation hustle. So what do you think? For me, these 5 questions answer a lot about how worthwhile it is to invest in semiconductors. Do you find this useful? Let me know in the comments down below. I would love to hear from you. And if you're into ETF investing, I urge you to check out my other playlists and my other videos. This is the kind of content I release every single week. Thanks for watching, and I'll see you on the next one.